Sales up 9.4% and listings are down almost 13%, but prices are still falling. So three numbers same month and they don't agree with each other. That's the GTA market in June 2026. And if you only read the headline, you will get half of the story. By the end of this video, you will know why Toronto Regional Real Estate Board is calling this a turning point and why we, the real estate agents actually closing deals this month, are telling a completely different story. So one of us is wrong, and I will show you which one is. Track just released June's numbers. 6,770 homes sold. Sales are up 9.4% from last June, and the new listings dropped 12.9%. And the average home price is $1,058,000, still down 3.9% year over year. So sales are up, supply is shrinking, and prices are down. That combination is exactly where everyone's confused about, where this market is actually stands. Here's the number that matters most: active listings. Active listings are down 13.5% year over year to 27,329. In other words, the flood of inventory that gave buyers all the leverage over the past 2 years is drying up. And Toronto Regional Real Estate Board own Chief Information Officer Jason Mercer said it plainly in a recent interview. Listen to what he said.
So you have said, too, that prices could level off and even start growing into 2027 or even the later half of this year. What has to happen for that forecast to play out?
I mean, we're already starting to see it a little bit over the last couple of months. If you look at the seasonally adjusted data, you see that average selling price as well as the MLS HPI. That trend is definitely flattening out. I think if we continue to see sales up on a year-over-year basis and new listings trending in the other direction, that'll just see that competition increase between buyers even further in the second half of this year. And anytime you start to see that divergence between sales and listings, you start to see tighter market conditions. And ultimately, it does result in higher home prices.
So sales are up, new listings are down. That's tighter market conditions. And tighter conditions are usually the first sign before pricing power shifts. But here's the strange part. Prices are not changing just yet. Not significantly, at least. I don't believe they will rise in a day or two. It could take a year or even longer. The second number, it's not one market, it's actually two. The detached home sales in the city of Toronto actually posted a moderate price gain year over year. The average price sitting around 1.7 million, up less than 1% year over year. In other words, it's basically stopped at declining. Only 3.6 months of inventory and list to sales ratio at 98%. Home selling in 22 days. That's not a market in trouble. That's a market that's quietly stable while everyone is still talking about it as like it's falling. But on the other hand, the condo market is still falling. The average price, $665,000, down 9% year over year. That's the segment absorbing almost all the price decline you keep hearing about. And 1,124 sales against 5,464 active listings. That's a 4.8 months of inventory. And on paper, that's actually the lowest that number been in a while. So why the split? Because condos are the most well-supplied segment right now. And first-time buyers coming off the sidelines are still getting real negotiation power there. But the detached homes are the opposite story. That stock is finite. Sellers are not listing unless they have to. And buyers are already competing for what little comes up. Now pay attention to this. That gap is going to widen before it closes. The Chief Information Officer, Jason Mercer, himself admitted pre-construction condo sales have basically dried up. That pipeline runs dry eventually. And when it does, today's condo oversupply becomes tomorrow's shortage. Meanwhile, almost nothing is being built in that missing middle townhomes, the stuff between condo and detached house. That's the real supply story. And it's not a June story, it's a multi-year one. By the way, I'm Ilham Ibrahim, a realtor here in the GTA. I help buyers and sellers navigate this market with clarity. My info in the description if you want to chat about your specific situation. Now let's connect this to what actually is happening on the ground, because it's a little messier than the headlines numbers suggest. We, the agents, were describing spring bidding wars just weeks ago. We experienced multiple offer situation, big competition, and strong energy. By late June, that same energy was fizzling. Buyers who are not under pressure are pausing their search until fall. Some properties are not even getting offers on the night they are supposed to. At the same time, some sellers are rushing to list now because they are worried more problems are coming. The Bank of Canada said about 9% of GTA borrowers have lost enough home value that they might not be able to refinance in 2027. So some agents think that's why some homeowners are selling now before more people under money pressure hit the market later this year. So we have got TREP leadership calling this a year of two halves and expecting a price growth to resume. And on the ground, you have the agent describing a market that's cooling the moment that spring rush ends. Both things are true. They are just happening on a different timelines. So what does this mean for you? If you are a buyer, condos are still your best negotiation position right now. High supply, softer prices, real leverage. And detached homes are different game. If you are waiting for that segment to get cheaper, the data says the opposite is more likely. Competition is already building there. And if you are a seller, single family and low-rise homes are your strongest hand right now, especially if your property does not need much work. If you are sitting on a condo, be realistic about pricing. You are competing against a large patient buyer pool that has options. And if your equity position is tight, don't wait for a perfect market signal. The agents seeing this up close are already telling stressed sellers, list before the fall wave, not after. So sales up, listing down, prices are still soft. Is the market turning a corner? Kind of. It's turning a corner in a slow motion, and not every street is turning at the same speed. Here's the line I want you to remember. A tighter market is not the same thing as stronger market. I track these numbers every single month, so you don't have to dig in the TREP report and get the information. If you want to learn more about the GTA market, hit the subscribe button. Thank you for watching, and I'll see you in the next video.